Hello friends, this is Raj Sastry from Raj Option Trading. Let's talk about Activision Blizzard. It's into video gaming industry and stock has been doing really bad of late with a lot of allegations on the company around misconduct. Let's look at this company into a little more detail. As you can see here, they got a lot of video games here and many of these video games are billion-dollar franchises. It's doing very well in the video gaming industry. So with that, let's jump in here and get started. We'll look at company overview and major ETFs holding ATVI, competitive landscape. Let's look at few other companies in the same area and review few charts and do a deep dive and look at the financial summary and stock performance and compare Activision Blizzard, Electronic Arts, Take-Two and Zynga and do a final verdict. So with that, let's jump in and get started. As you look here, we got major ETFs here like Vanguard, QQQ, SPY, all great ETFs holding good chunk of Activision Blizzard. I think it's good to see all these major ETFs are holding this stock of Activision Blizzard. And XLC, which is both video gaming as well as social media and few other stocks, it's down big time, evidenced by RSI 36, which is very low. And as you look here, we got video gaming ETFs here. We got BETS, which is sports betting. We got Hero and ESPO, all down as you can see here in 1 day, 5 day, and couple of these are down even in 10 day. In general, video gaming stocks are a little bit weaker as you can see here. We'll jump in and see and look at few stocks and see what's worth buying here. So with that, let's jump in. Let's look at top video gaming stocks here. These are peers of Activision Blizzard. As you look through here, we got a lot of stocks here. It's sorted by 1 year performance. Few of these stocks are a little bit new. They don't have 1 year performance yet, but they seem to be doing very well. Look at Roblox here, doing great here in 6 months. It's up 38% in 1 month here after the earnings. And we got Rush Street doing very well, 50% up here. And keep watching, we got GameStop doing great here, 1,584% in 1 year. And we got Avid doing again great here. So, I love to look at these stocks here. A couple of these are great stocks here and keep watching the RSI levels. If the RSI is a little bit low here, like the one on top here, MYPS, you could take a small position here, given institutions are also buying this stock here. If the RSI is too high, like Roblox, let it come down a little bit. No need to rush right away. As you scan through here, we got Skills here. Skills is in a good territory right now. RSI is very low. Stock has been dropping off. You could buy some Skills and take it from there. Also, keep a watch on stocks with a nice quarter-over-quarter sales growth and nice gross margin. Those are the great stocks here. And when the RSI is low on such stocks, you should slowly buy. For example, INSE, just $13 stock here. Keep watching low RSI, nice quarter-over-quarter sales growth here, and nice gross margin. And SLGG is into sports betting. Again, right now RSI is low here. You could buy some SLGG here. And also SGMS, again a great play here, low RSI. I would look at such candidates here where there is a nice sales growth and gross margin and low RSI, indicating stock is sold off here, and buy those names here. As you look through, we got a few more here. We got Boyd Gaming, Turtle Beach, which is again accessory type play here. Unity Software. Unity Software is a little bit hot for me right now. I'll wait for a little more pullback here and then buy this great company. And we got a few more which are down here. RSI is very low here, like Electronic Arts, Take-Two, Activision Blizzard, the stock that we are going to talk about today. All low RSI sold off. I would buy these names here like Electronic Arts, Take-Two, Activision, all great stocks here. And Real Network right now, as you can see here, there is no sales growth but nice gross margin. And Zynga, I love this stock also. Nice sales growth and gross margin. Stock has been selling off. Good to slowly initiate a position here. And then we got here, Penn and DraftKings. As we look through here, DraftKings has got low leverage or financial burden on its balance sheet, whereas Penn has got a little more debt on the balance sheet, as you can see here. Both work here. You could buy both, given they are beaten down right now. And we got Corsair here. Corsair is a great company. They're into accessories. Right now, stock is sold off. You could buy some Corsair here and take it from there. And keep watching the short ratio here. Many of these stocks have got high short ratio. A high short ratio coupled with a low RSI that tells you stock can go higher. So I would, if you are a short, if you want to have a short squeeze type situation, you could buy Skills. You could buy stocks like INSE here, and few more like Scientific Games and Boyd here. Actually Turtle Beach and last one here Corsair. You could buy those and expect a nice short squeeze. We got a few more here. We got China. We got a few China stocks here which are in the video gaming industry. We got NCTY, BILI, which is one of my favorite here. BHAT, again China play here, HUYA, IQ, and so on and so forth. Keep watching. Few of these stocks have got nice sales growth here and gross margin. Those are the stronger candidates, like NCTY, low price stock here, and Bilibili and BHAT, again a good one here, and HUYA, also good one here. You could buy such stocks here and take it from there. And with that, let's jump in here and look at rest of the world stocks here. Not China, not USA, other country stocks. As you see here, we got few here. Look, we got EGLX, nice sales growth, nice gross margin. You could buy some into this weakness here. Given this one is strong here, I would wait for a little pullback here. Right now it's super hot. I would wait for a pullback on EGLX. On the other hand, stocks like SE, which is a Singapore play here, it's a great stock here. You could buy this up here with a low RSI. Stock has been selling off. It's a great one. And then you got Sony, which is steady eddy type stock here. Right now it's RSI a little high here. I would wait for Sony to pull back a little bit and then buy. And you can look at GAME here, game. This one has got nice sales growth, nice gross margin, low RSI. You could buy this one also. Very low price stock here and very low market cap. So with that, let's jump in here and look at beaten down video gaming stocks here. So let's look at candidates with a low RSI, positive gross margin, and positive quarter over quarter sales growth. These are stronger candidates, so you could look at and you could look into and buy them. As you look through here, all these stocks have got nice sales growth here, nice gross margin, and low RSI. You could buy these stocks here into this weakness and take it from there. Look, we got SGMS, we got BYD, Bilibili, and so on and so forth. We also have Activision Blizzard here, TTWO, Zynga, all great video gaming stocks. So with that, let's jump in here and look at few stocks and stock charts. As you see here, Activision Blizzard down big time. There is an allegation about misconduct, and CEO did not reveal that to the board. That's why stock came tumbling down. And they also had a few video labels got pushed out a little bit. That's why stock took a big tumble, as you can see here. As you look through here, Activision Blizzard, nice sales growth, nice gross margin, and IV percentile is high. If you're an options person, you could sell some put options below the stock price and make some good money here. So with that, stock has been pulling back pretty hard here. 5 days 12%, 1 month 21%. Even 1 year it's down here. So you could buy some Activision Blizzard right now. Chart is ugly here. You can slowly start buying at these levels and take it from there. And then you got Take-Two Interactive. I love this stock here. It's one of the great stock here, doing great. This also came down with the Activision Blizzard coming down. All these video gaming stocks are down here. I love Take-Two Interactive. You could buy this stock also into this weakness here. This one has got a little more volume going to it. On the balance, volume is pretty stable here. Came down a little bit, but pretty stable here. Take-Two, as you can see here, they have some sales growth, 2% here, and gross margin is great. As you can look through here, they also came down significantly, and RSI is very low. And then we got here Electronic Arts, again a great stock here. Look, anytime they're down, they will always bounce back. Right now, big drop here. I think it's a good one here. Look, nice sales growth, nice gross margin, low RSI. Stock has been dropping off. I think it's a good one to buy and sock it away. And then you got Zynga here. It's a low price stock here. Zynga has been dropping off, as you can see here. On the balance, volume is also low. Nice sales growth and nice gross margin here. I think it's a great one here. If you don't want to buy expensive stocks, you could buy some Zynga and accumulate and take it from there. So with that, we got few more here. We got a Singapore play, SE, great stock here. I love this stock. You could buy some SE here. As you look through SE here, low RSI. This means if you even if you want to buy some call option here or a call spread, you could do that without paying too much premium. Then we got BILI here, again a great stock, has been trading sideways for a while here. This is also a good one to buy. As you can see here, BILI has got a nice sales growth and gross margin here, low RSI. You could buy this stock here and take it from there. And then got SLGG here, sports betting play here. It's a little bit low price stock, as you can see here. Nice growth and nice gross margin. And you could buy this also into this weakness. Has done great for 1 year and sock it away. And then you got DraftKings. This is into sports betting again. Stock has been dropping off of late. On the balance, volume is also dropping off. You could take advantage of this weakness. Given nice sales growth here, nice gross margin, you could buy some DraftKings and take it from there. So with that, let's jump in here and look at Activision Blizzard, its background, and let's also do a deep dive as we go forward. As you look through here, Activision Blizzard, they develop interactive entertainment content here, and they got three segments here: publishing, entertainment, and King Digital. All are doing well, and they make money through these video games, and they also license software here. And as you look through this chart here, I got a weekly chart here. Stock has been doing great, doing nicely here in 2020, but 2021 here, it's not doing great here. They got a lot of these misconduct allegations here, and CEO did not tell it to the board here. That's why stock came down tumbling, as you can see here. Analysts are saying moderate buy here, with 13 analysts saying buy and 5 saying hold and 1 sell. As you can see here, they got this issue with this harassment issue here, discrimination issue, and right now looks like they're taking action to have some responsible workplace responsibility committee here, and they spent a lot of time in their quarterly earnings to talk about this misconduct and how to prevent it and how to become the great company when it comes to culture going forward. And stock came down, as you can see here. There is also ask for the CEO to step down here. If the CEO step down, stock can go maybe a little bit higher. We'll see how it goes. CEO told the board that he will try to fix the issue, and if he can fix the issue, he'll stay on it. We'll see how it goes. So with that, big news is really this whole harassment and misconduct issue. That's why stock came down. It could be okay to slowly start buying here and take it from there. And as you look through here, we got leadership. Bobby Kotick here, he's the CEO, and 40% approved the CEO at this time. This is because of all this misconduct, and CEO did not reveal it to the board here. That's why approval rating probably dropped down big time here. And this CEO, he was a chairman and CEO of Activision before the merger. Then he became CEO of this combined company. He seemed to be having a good background here. He knows what he's doing. He's got relevant experience, and they also have this Call of Duty endowment here to help the veterans and help them to get some jobs here. That's a good cause here. That's very good. So with that, as you look through here, you should wonder, why should I buy Activision Blizzard? So Activision Blizzard is well known for creating multi-billion-dollar franchises. They got a couple of them under their belt, and they the Call of Duty remain one of the top selling games here. They're doing great. And they also have solid pipeline here for next year with Overwatch 2 and Diablo 4. And they also have this endowment where they help the veterans to find high quality careers. So it looks like great proposition here. They seem to be doing well, solid pipeline, helping the environment and the veterans. It's always good. So with that, as you look through the results here, they seem to be doing pretty okay from a result perspective. They got nice margin here, and they also have nice earnings per share here. So overall, I think they're doing okay here. From an outlook perspective, as you can see here, it's a little bit light, but we'll see how it goes. They got some challenge with a couple labels pushing out here, and they will provide some outlook in February time frame. So overall, I think it's doing well here. We'll continue to watch this and take it from there. And they got three strategies here: expand audience reach, deepen the engagement, and increase the player investment. So overall, I think strategies seem to be working well. They got multiple labels here like Call of Duty, Diablo, Overwatch, Warcraft, and so on and so forth. They seem to be doing very well with these three strategies, and their competitors also catching up and copying some of these strategies. So with that, from a pipeline perspective, they got Call of Duty, Diablo, Overwatch, Warcraft, and Candy Crush. New launches are coming here. I think that's why they're very good on the pipeline here, especially the Overwatch 2 and Diablo 4. It's a little bit getting delayed here, but I think it's good to have it delayed than have a poor quality. So with that, let's jump in here and look at Activision Blizzard and do a deep dive. So as you look through from a snapshot perspective, stock is around $62 as you can see here. Market cap is around $48 billion, and they got a little bit float short, not too much. And as you look through here, nice volume, and beta is 0.61. It's around around 61.61. If S&P moves by $1, this might go up or down by 0.61, which is okay. As you look through here, sales, nice sales here, $9 billion sales here, nice gross margin and nice operating margin. Company is making money, nice net margin here. As you see here, I think overall numbers are good for this company here. They seem to be having a positive cash flow here. Overall, I think it's good here. Earnings EPS growth for this year is positive 44%. EPS growth for next year as of now is 0.21 here. So as you look through here, RSI is 27.79, which is low. That's why stock is beaten down here. As you look through here, they got a lot of cash, $9.7 billion cash here. Debt to equity ratio is low here. That's good. So overall, I think it's doing very well here. IV percentile is high. If you're a put option seller, you could sell some put option and make some money that way. And as you look through from a return perspective or a performance perspective, stock has been in the red in 1 day, 3 month, all the way to 1 year. They are red all the way. That's why stock is pulled back pretty hard on this misconduct allegations. It could be good to buy slowly and accumulate a nice position here. And as you look through from a numbers perspective, on an annual basis, earnings per share is doing very well, going nicely here. Sales is pretty good here, and shares outstanding is pretty good. Nothing glaring here. It checks out from an annual number perspective. From a quarterly number perspective, sales is a little bit weak in the 9/30 quarter. That's why Wall Street did not like it too much. But they're also spending a lot of money on the investments, R&D here. It's always good. It's great to see company like Activision Blizzard spending money on the research and development here. And net quarterly income is positive. That's also good. It's a little bit down here for the last quarter, but overall it's good. As you look through from a quarterly performance perspective, it was a $36 billion company, and 9/30 it was a $60 billion company, as you can see here. They're taking the market share from the competitors and growing nicely. price perspective, it was a $47 stock here. It became $77 stock, back in 9:30. So overall, I think it's trending in the right direction, growing nicely. And from a sales perspective, they're growing the top line sales nicely here. A little bit weak in 9:30 quarter if you compare sequentially, but overall they're doing very well. There is a positive sales growth, that's always good. Earnings per share is positive, that's also good here. And as you look through here from a cash perspective, they got a lot of cash. No need to worry about the cash position here. They have very good cash. And debt is low, as you can see here, debt to equity ratio 0.2, which is very low. And as you look through cash flow, positive company, I like that. Gross margin is positive. Operating margin is also positive. A little bit light, as you can see here. It was 75, became 74. It was 42, became 40. Net margin, it's 8 points down here in the recent quarter. That's not trending in the right direction. I think they should improve the situation here. Then they're spending some good money on research and development. It's always good. And as you look through here from a ROA and ROE perspective, double digit here. I love this here. It's great to see a company with a double digit return on asset and equity. And finally, from an earnings per share perspective, company is still, valuation perspective is still cheap. You could buy the stock here and go from there. So in a nutshell, this company knows how to grow the top line revenue and also control the bottom line expenses and margin. That's why it's a great play here. I think with the couple labels pushing out a little bit, it might have a little bit impact. As you can see here, there's a little bit impact in the recent quarter when it comes to margin. But overall, this company knows how to control, how to grow top line and control the bottom line. So with that, from a earnings perspective, I think they beat the earnings per share. They also beat the revenue. That's a great story. And I think they spent a lot of time talking about their workplace culture, how they have done a poor job with this issue on this harassment situation here. They want to become the leader as they go forward. And as you can see here, there is a lot of competition in this space. They're working through their talent, and they have some delay in Overwatch 2 and Diablo 4, so that this might have some impact. They're watching this very well, and I think it's good to delay than have a poor job in terms of quality. And as you look through here, they also have a lot of engagement on an average. That's always good. They had a good quarter here with the revenue of $2.7 billion. That's also good. They got some good net bookings number here. It's great for Call of Duty, one of their premium franchise here. And as you look through here, they are asking for some time to provide the better outlook here. They will provide an outlook sometimes in February timeframe. Overall, I think they did very well in terms of quarterly result, but I think we'll see how it goes. The margins are a little bit weaker, and the news about pushing out some of these labels was not well received by Wall Street. So with that, let's look at earnings history here. As you see here, they've done great in the latest quarter. They did beat on the earnings per share. They also beat on the revenue number here. But as you keep watching here, the beat is not great. Look at the previous beats. They had nice beat, 15 cents, 15 cents, 4 cents. Now it's 2 cents. And look here, revenue beat. Previously 31 million, 285 million, so on and so forth. Now it's just 0.61 million. That's why by looking at this, Wall Street is not super happy. This is one more reason for the stock to come down, in addition to this brutal allegation about the misconduct. So let's see how it goes and take it from there. As you look through here from an insider perspective, we have stock doing very well, down big time, as you can see here, and insider, they're buying slowly, as you can see here. We got this Nolan Peter. He's buying good amount of share here. He had been buying since August here. I think he bought about $2 million worth of stock here. That's always good. That's why there is a insider buying, as you can see here. and there is some institutions selling, but it's not too much. So overall stock is down big time, as you can see here. RSI 28 stock is oversold here. And as you look through here from an analyst perspective, stock came down and there's some allegation on the company here. And look here, we got 3-4 analysts downgrading the stock here. That will be causing some issue with the stock here. Here we got MKM Partners downgrading with the target price of 54. Right now stock is doing around 61 here. I think this might bottom out around 60 and then go higher. So with that, I'm comfortable at these levels here to slowly buy Activision Blizzard and go from there. As you look through from a performance perspective, we got yearly performance. As you see here, this company has been there for a long time. As you see here, it's done very well. Few not so great years. 2008 was a financial meltdown, as you all know. A little bit downturn once in a while. 2018 we had this federal government increasing the rates, stock market tumbled, but generally this stock is doing great. Whenever they're down, it can come up nicely. So look here, 2008 down 41%, came back nicely. That's why this stock is one of those steady Eddie stocks here. You should look at this as a buying opportunity here. This can be a great stock even for your retirement portfolio or long-term investment with this huge price drop here. And as you look through monthly performance here, we got a little bit not so great performance in September, August, July. Look here, a couple of bad months here, more red than green here. That's why it's a good one to acquire slowly and accumulate. And as you look through weekly performance here, look, we got down 10%, down 13%. So I think it's good to slowly accumulate given the stock is already down and bad news is already factored into the stock here. And daily performance, huge drop, I would say slow drops, as you can see here. Huge drop on 3rd of November here, 14% drop here. At this time, probably it's good to slowly start buying and accumulating this great video gaming stock here. And if you look through the performance made pattern here, we got all the years on top, 2021, 2020, so on and so forth. Look, typically November is a little bit weak month for this stock here, down 21% this year, down 2% 2019, 27% down 2018. So typically you can see this by looking at this, November is a little bit weak month for this, but once we're past November, I think it can be good as you go into December and even January. We could see some good results. So I think this pattern helps to understand what are the weak spots here. By looking at this, we know November is a little bit weak here, and there may be some weak spots as you see here in July, and even February is a little bit weak, as you can see here. You could get a good cursory view and see what's expected by looking at this matrix here. So with that, let's jump in here and look at charts. As you look through the chart here, stock came down big time back in 2018, as you can see here, bounced back nicely. Now it came down big time, so this time is I'm sure it's going to go higher. There's this good candle here with the nice green candle here. I'm thinking it's good to buy at these levels here, slowly accumulate. This stock knows how to bounce back from these type of drops. As you look through, we got 1 day, 1 year chart here. Stock is down after the earnings, as you can see here, a big gap down. Right now, chart is ugly. As you can see here, we got RSI stabilizing still low here, and implied volatility is shooting higher. IV percentile is 77. You could sell some put option below the stock price and get a nice premium here. And look here, DMI is negative. A red line on top, blue line on the bottom here. Right now chart is ugly, DMI is ugly. I love to see a blue line on the top here, but right now it's ugly. As you look here on the balance, volume is down. More folks are selling than buying. Check-in money flow on the other hand is stabilizing. That tells you smart money is slowly pouring into the stock here. They're buying slowly. So with that, in a nutshell, chart is ugly. stock company is great. They got some bad allegations on this misconduct here. Probably it's good to take advantage. I know it's a horrible incident what happened in the company, but I think they're trying to fix it. It may be okay to slowly buy the stock at these levels here. So with that, if you look at the action chain here, stock price is around $61 as you can see here. Look, we got a lot of call options at 62.5, and look, 3,000 call contracts at $75, and we got at 95 strike price we got 2,700 call options traded. So that tells you the options market, folks are betting this stock will go higher. And as you look through the put side of the house, keep watching the open interest. There's some open interest, but not as high as call open interest. That's why in the options market, folks are bullish. They're betting the stock will go higher. So with that, if you look through the option statistics here, 32,000 call options traded, 15,000 put options traded. That makes the put call ratio as 0.4. That's the bullish put call ratio. If it is above 1, that means it's a little bit bearish. If it is below 1, even below 0.5, that's the bullish here. That's why in the option market, folks are betting this is a temporary weakness here and the stock can bounce back nicely. So with that, let's quickly compare Activision Blizzard, Electronic Arts, Take-Two Interactive, and Zynga. All these are my favorite stocks here. I typically buy them from time to time when they're down like this and hold it for a long time. So with that, as we look here from a price perspective, we got Electronic Arts a little bit expensive here, and Take-Two is a little bit expensive from a purely price perspective. Zynga is very low price stock here, and Activision Blizzard is somewhere in the middle. And from a market cap perspective, Activision Blizzard is the biggest one here, and then EA, and then Take-Two and Zynga. Average volume, all are liquid stocks here. They're trading very nicely here. And from an analyst's perspective, the analysts are recommending a strong buy for Activision Blizzard and strong buy for Zynga and buy for EA and Take-Two. Overall, I think all the stocks are doing well. They have a buy rating or a strong buy rating. And as you look through from a revenue perspective, Activision Blizzard is doing great from a revenue perspective, a lot of revenue, and then Electronic Arts, and then Take-Two, and then Zynga. From a revenue growth perspective, as you can see here, EA Electronic Arts has got great quarter-over-quarter revenue growth here, and then we got even Zynga has got a great revenue growth here, and year-over-year revenue growth perspective, we got nice revenue growth for Activision Blizzard, and also we got nice revenue growth for EA as well as Zynga. As you look through here, we got gross margin, all great gross margins here. Net margin, all good net margin, except for Zynga here, which is negative. And nice free cash flow, I like it. And debt to equity ratio is low for most of these stocks. I think that checks out here. As you look through from a performance perspective, many of these stocks are doing not so great in 1 month, 3 month, 6 month, and so on and so forth. Even 5 year, as you can see here, Activision Blizzard has done nicely in 5 years, and so did EA here. And as you look through here from a valuation perspective, price to sales ratio, all these are cheap stocks here from a valuation perspective. You could afford them nicely. And from a growth perspective, I think all are showing positive growth here, probably with the exception of Zynga when it comes to, even Zynga has got a positive sales growth here for next year. And as you look through here from a relative strength perspective, all the stocks are down here big time. I think it's good to buy slowly. I love ROE and ROA for Activision Blizzard, EA as well as Take-Two, all doing great here. And from a I think this is a quick repetition here. Let's ignore this one here. And finally, we got financial health. From a financial health perspective, the Activision Blizzard is A grade here, B grade. EA is A grade, and we got Take-Two as a B grade here. So I think overall, I think it's a great time to buy all these 3 stocks here, all these 4 stocks. Zynga being a low price here. and other stocks are doing great. And if you look at the future expectation here, from a next year EPS growth perspective, all are positive. So all these four stocks are great to buy at these levels here and accumulate. So with that, jump in here and look at the final verdict. As you can see here, there is a horrible incident that happened in the company a while ago, and CEO did not reveal it to the board. That's why stock came tumbling down. And now they have some committee here, and they're putting some governance in place to avoid such incident, and they want to become the best leader when it comes to workplace culture going forward. And they got few labels here: Overwatch 2, Diablo 4. They got pushed out a little bit, and that's why there may be some impact of this to their earnings as we go forward. And they also have a lot of people engaged in their games, which is always good. And as you can see here, they generated a lot of money here, $2 billion here, above $100 million above the outlook. That's always good. And they got solid bookings, as you can see here. And they might have some little bit impact with this these two labels pushing out a little bit. They will provide a update sometimes next year in February. So with that, I think it's a solid stock here. Stock is oversold. Good pipeline for next year. I recommend accumulating this stock at these levels. I think Activision Blizzard is a great stock. Company understood their issue, and they're fixing it. I think in the meantime, you should slowly accumulate this company and sock it away. So with that, thank you very much. Happy investing and trading. Please subscribe.